There's a lot of legislation about taking money from your company. The HMRC make it difficult to take cash out, and they've cut a lot of loopholes, and they've stopped certain schemes as to where to draw money. So it's very limited as to how you can draw money out of your business from profits. There's some tax efficient ways, such as pensions. So pensions, if you want to pay in a pension scheme, you can take out 40,000 every year from the company. It's tax free and it's tax deductible as an expense. You can go back 3 years if you've not claimed for your pension previously. So if you were to do this year, there's as much as £180,000 you could take out of your company tax free and put it into a pension. Pension, obviously your money's tied up, so it doesn't help you if you want to get the cash now. In terms of salary and dividends, they're the other two ways that you can draw money out of your business. Salary, we always set up clients to take the minimum allowance, which this year is £12,500. So you take that out as a salary, and then the balance of whatever you need is through a dividend. And that dividend, you are able to have £2,000 tax free this year. Last year it was £5,000. It may get reduced next year, no one knows, depends what happens with the budget and what government we have in place, but currently you can take out £2,000 tax free as a dividend. Dividends are taxed less as well, so up to £50,000 your dividends are taxed at 7.5%, and then above that you start to go into the higher thresholds of 32.5%, and then if you put over 100,000 your personal allowance then gets reduced from that. But that's pretty much the only really legitimate way to take money out of the business, hassle-free way as well, and sort of remove any risks from HMRC having any issues with that. There's no other real way from profit extraction, but there are ways to deal with excess cash in the business to be able to make that work for you. So for example, if you've got a business with excess cash, you don't need it in your pocket, but you'd like to make it work for you, because often you take that money out and maybe invest it into different things to that money to grow, but if you take it out of your business then you pay tax on that. So you can do certain investments through the company, so you don't have to extract the money from the business and pay tax on it. You can invest that directly into different things, such as there's things like corporate bonds, which can give you a good rate back of interest, and there's things such as you can get very complicated into sort of VCTs and different type of investment schemes, but there are ways that you can do that into the company. So if you don't need the cash but you want to invest that money, you can do that through your business and reap the rewards from that. Now the downside of it is the company itself benefits from that gain and will pay corporation tax on it, but if you were to do a calculation on what the net tax rate you would pay, i.e. you personally and the company, you would find that you are better off doing it that way.